Hello, and thanks for having me. It's always cool to be here. Now it's my third time, I guess. And today I won't talk about a research paper. I won't talk about a research project or an industry project. I just want to give an impulse. I just want to reflect on a development we all experienced, the so-called Stablecoin Summer we just experienced. And it's about evolution of money. And on the other side, what does that mean for the European digital sovereignty? This means it's more a question about perspective and outlook. And some words to my person. I'm a professor at the University of Bayreuth. I'm an information scientist. I'm teaching there, of course, but I'm teaching also at the TUM. And apart from that, I have also a role as a Fraunhofer director of the blockchain lab there. And yeah, if you want to discuss topics, if you want to work for us, if you want to come by, if you have exciting challenges, you are very welcome to contact me, of course. And saying that, with that, I think we should move on to the Stablecoin Summer. I think the development over the last year, or 1.5 years, is very exciting because we have talked so much for so long time about stablecoins. In my experience, that started at least 7-8 years ago. And today, for the first time, I would say stablecoins really have their moment right now. And before that, sometimes it was, even for my students, it was kind of boring. So people ask, what can we do with that? It's not really blockchain, it's not really money, so come on. It's, it has some use, but maybe it stops there. And now we see that with web applications and with this booster, and we will come to that, to the numbers here. But my personal line of thoughts today is it's not just about the success of stablecoins, but it's also about the perspective here for Web3 applications in general. Why? Because of digital wallets. If people get used to that, if people in companies get used to the idea of digital wallets, and we all know what that means for how to behave with security, with, you know that, with passwords, etc. It's different, of course, and the concept of that now maybe it's coming into the mainstream. Now that's at least an option, very powerful idea here. And I think that stablecoins in this sense could be a game changer. And this is worth, it's worth to look at that a little bit deeper. So I talked about the numbers, and one impressive thing here is the payment, the development of the digital payments in the US. This would be, I have 3 flashlights. This is number 1. And it's, as you can see here, it's about the stable coins that have been moved. We are talking here about transaction volume, and this means $30 trillion in transaction volumes we can see here over the last 12 months. So, and trillion is correct. So it's about transaction volume. Every transaction counts, and this is why we end up with trillions here. And you can see in relation to the other very famous things, like, for instance, stablecoins and Visa transactions there. So classic, traditional credit card payments, it's impressive. Because 4 years ago or so, it wasn't even measurable, the volume, the transaction volume. Yeah, and now it's more than Visa and Mastercard together. It's impressive. The question is, again, is stablecoin on its way to bring Web3, blockchain, digital money really into the mainstream here. And Flashlight 2, I think, shows us, yeah, the options, it's definitely a likelihood there, because already stablecoins are cheap and very fast. And that's makes it the solution very attractive for a lot of companies. So we have made progress on the infrastructure, blockchain infrastructure in the last years. And I would say significant progress we saw there. Years ago, I knew about, we tried that, we talked to companies, etc., or providers, and it was always a problem with layer 1s too slow, layer 2 not really scalable, not really secure, and also not really attractive. This has changed. Now we have Solana for layer 1, very fast. Ethereum layer 2s like Base showed up, pretty impressive from my perspective. So things have changed here. And now, as we can see here in this graph, or this table, stablecoins are really now the cheapest way to send a dollar worldwide. Wow. And even very, very quick, under a second. And compared to other existing options now, and this is what is very, very important for companies. What's the business case here? And we see, okay, other solutions are quite, if you look international flow of money here, very clunky, very costly, and stablecoins are promising. So what are the use cases here? You can imagine about the classical cross-border payments, of course, this is one thing, but also think about cross-border payments in the sense of you have company A is active in many, many countries. And at the end of the day, literally the end of the day, in one region you say, okay, how do we move the money from one company part in one nation to another? Because you want to solidify that. You want to take care of what does it mean in terms of risk, money exchange, losses, etc., inflation. This is really, really a problem in companies like Turkey or in South America. So if you do that, and Stripe, for instance, it's a $90 billion company, and they do e-commerce solutions, payment solutions for companies internationally. So they work with that. They work with stablecoins in this sense. So this is a very, very powerful use case for them. And then, okay, of course, we will see later on what are the next steps here. But to start with that, I would say it's already a very promising solution if you compare that to the situation a couple of years ago. So definitely progress. Okay, and then let's have a look at the next flashlight in the sense of what does it mean for the actors there? So what is the business model behind that? In comparison, we just heard from my colleague, Mr. Maumer, other ideas with money, e-money, or other similar solutions. So this was a perspective by the banks. But with stablecoins, it's interesting to think about what changed in the US with US regulation. Why? This summer, the Genius Act, as you all know, passed the Senate, Congress in general. So, and they defined very specific roles for the banks and also for the different actors here. And if I pinpoint a couple of interesting elements and implications here, I would say that for one, the interesting part is if you compare that to the situation in China. Oh, thank you. If you compare that to China and Europe with MiCAR, we see that issuers are not really handled like a bank. Yeah? So the issuers like Circle in the US, they operate more like fintechs. So fintechs with payment functionality, but definitely they are not credit institutes. And this is important because then we see that we have this line of this is privately orientated in the US. Absolutely. So even the banks are not allowed to issue stablecoins there. It's a very specific situation here. And for banks, this means if you are Circle, to give an example here, with a USDC, as a company like Circle, you cannot really make money, you cannot create money there, this is true. On the other side, as an infrastructure provider like Coinbase, etc., they can work with the stable coins or with the packed money behind that. That's possible. So very specific situation, but the idea to orientate this line of regulation for private companies, for competition there, and not look to the state, to the central bank as an enabler for digital money is totally different from the European situation, and definitely right now at least from the Chinese position. So we have three different, I would say, three different approaches here when it comes to stablecoins and how they will proceed here. The situation for the US, at least at the moment, seems to work quite well. So startups and incumbents, they move very fast. We see there PayPal, they issued a stablecoin. Stripe, I already mentioned them, and many others work on Genius compliant stablecoins, so all dollar-pegged. And Visa has introduced a platform as well. So there are many things on the way. It's just a flashlight here, of course. I cannot, I don't see everything that's happening there, and it's quickly happening there. It's not that easy to give an overview, but the current market reality is the US dollar stablecoin market cap today is around almost $300 billion. And now if you ask what's the European contribution in comparison to that, oops, we now, guesses are it's somewhere around 300 million, 350 million, and that's order of magnitude. Yeah, not that big at least, right? So market capitalization, of course, is one thing, but we have to think about the competition here that's going on. So what kind of battle do we see? I try to make that up with, as you can see, with an AI, of course, but it wasn't that easy. I'm not used to that, but I want to stress that Europe, we do not have even one international relevant payment system right now. Not even one. So that's important. On the other side, I already mentioned Visa, Mastercard, Apple Pay, Alibaba, PayPal, etc. You can list the entire range. None of them originate from Europe. So you could argue, okay, we have plans for the digital euro, right? Yeah, I mean, it's still a long way off. We have 28 countries in Europe. That's a good thing. I love that, but yeah, for coming together and agree on something, it's not that easy, sure. And the other thing is, some people argue that it will not be little more like a prepaid card plus at the end. So we can argue about that, of course. At the end, the question is what our other actors are doing. We looked at the US, A. B, we know what we are doing. And C, the question is, what is China doing? And this is interesting. China, for years, they had a very large, huge project going on with CDBC. So a very digital money backed by their central bank, yuan-based, very, I would say it's a very control approach. So it's all about monitoring everything. It's not about privacy, not at all, in the contrary. But now they are still doing that. And on the other side, they started with a public digital alternative to a private stablecoin. They went for a yuan-based stablecoin. Why? It's about geopolitics. If you look at the USDC, for instance, and see, okay, why is everything dollar-based or pegged by a dollar? Why do the Americans want to, or the US want to attract so much stablecoins here? It's a pretty easy story. If you back that with dollar or set the regulation, the framework for that to do it, then you attract from a private side investment. Private side means companies and at the end consumers as well, sometime at least. And you attract international money, so to speak, to lend you money, to give you money. So this is in the sense of who will dominate as a currency and also as a digital currency for the US. It's all about debts for them. With stablecoins, with dollar-based stablecoins, they are paying their debts or finance their debts, and the other people paying for that. That's geopolitically, it's very, very important. I know it's a computer science conference, I'm an information scientist, but still we cannot ignore that. It's very, very important for all of us. Yeah, and Europe's prospects here, at least to speak, bleak. But this will change, of course. We will come to that. So, we could argue we have MiCAR. I really like the regulation. I'm an information scientist. It's not my profession, law, but we could say we Europeans have that regulation in place. Why don't we see scalable solutions all over the place? Why is that? We have a crypto asset regulation. We should be ahead, but it's obviously not really the case. And yeah, oh, sorry, this was too quick. My impression is that MiCAR prioritizes financial stability and consumer protection over competition and really scalability and innovation. That's, at the end of the day, the problem here, or the challenge, I would frame it. Our Euro system here is focused still on the development on a digital euro. We do not want to see a lot of stable coins at the end of the day from a central bank perspective. Doesn't make sense. Think again about the geopolitical situation. In Europe, we have 28 states. I hope the number is correct. And financing our debts in the sense, in general, financing debts or debts at all, we don't want that. We have strict limits there as a European Union. Yeah, this is not our model to say, okay, let the world pay for our debts. It's not our model. This is a very important thing. And second, of course, we have 28 nations, and I would say we have 28 national central banks. I'm not sure they all have the same interests. There are other experts to really come to a conclusion here, but I would say it's definitely important to mention that. So we saw the Genius Act on the one side, and on the other side we have the with all the market-driven adaptation, and then we have the European approach, where we always start with a comprehensively detailed view on regulation. So we have so good regulation. It's pretty good. If I talk to people from the legal department, if I talk of companies, if I talk to professors like Maumer in person, I don't know what he thinks about that, but it's pretty clear. So, and with the EU AI Act, it's pretty similar. We have the best regulation in the world, but have you ever heard that a referee won a game? I didn't. Definitely not. So the question is, if we are behind, what can we do? What's next? And the prospect here for me is, think about in this battle, in this framework, okay, thank you, round one. Round one was about, or is about, cross-border transfers, as I mentioned, store of value, securities trading, and so on. I'm not sure we can win this game anymore. What does it mean? This means if we want to catch up, it would be a lot of efforts there. We should try, of course, but we should also, like risk is likelihood times damage, so we should prepare us and think ahead. So if we look to the platform economics, they tell us in a digital economy, in a digital game, it's very hard to catch up. So my impulse here, my contribution should be, maybe we should look to round two. And this would mean stablecoins have definitely the power to transform the payment industry, but it's not all about to lower fees here. For me, personally, I think that the thing with programmable money and with AI agents that can pay each other, micropayments, etc., this is very attractive. This is a new market here, huge. We do not know how big, of course, but definitely it will come. The question is, are we in or are we out? And right now we have good researchers, we have companies, we have a lot of startups in Europe. We can do it, of course. And if it's interoperable, of course, we can cooperate, and we will, with all other countries as well. So we could talk a lot about what does that mean in terms of application solutions behind that. There's a very cool ongoing discussion right now in research, in industry, etc. And this is where we should shift our discussion in the future, or right now. At least we try to do that. Let me just say 2 words about digital sovereignty here. Because if we want to come to a European solution, we should really try to find solution where it's not possible for somebody else to plug off. This means we need things like, or in traditional architecture, software architectures is always the thing like, who's controlling the hardware is also controlling the software. Easy. So Europe today cannot pull the plug. It's not possible with all the payment systems we saw. If we go the next step, we should come to blockchain-based open solution, not proprietary solutions. We will hear this day or tomorrow, I'm not sure, about WorldCoin, etc. Sam Altman, the Sam Altman solution there, about identities, etc. This is not really a completely open system. So we need discussion here. It's important to do this. Just an example here, because the next part of digital sovereignty also means that we need trustworthy infrastructure. It's public goods here, a street. Do we want to invest in that public good? Do we want to roll it, operate it privately, etc.? One element is, of course, master data, things like digital identities. For people, Europe is quite ahead here worldwide. With next year it will start actually for all the member states with personal identities. Then next is organization identities, very important. Think about, again, AI agents paying each other. So then, of course, we need also machine identities and so on. And there is a common ground here. So we could and can start here. European data, so for transaction data, etc. Very good ideas in Europe, not only ideas, definitely more, and so on, data spaces, etc. Okay, so this was my personal impulse, recommendation. How can we achieve greater digital sovereignty in Europe? I think that we should blend the approaches, the US, the Chinese, see and try to find out what's scaling and why we see so much movement in the US and so low in comparison in Europe. So what's working? And this means experimental environments. We need, if we try to come up with public money means public code, and then we have to find out what's working or not. We have to start this discussion, and sometimes I would say it's about, is it more in the direction of evidence-based policy or policy-based evidence? Today we spend a lot of public money for things we do not really even measure at the end. If I think of things like data spaces, etc., we spend a lot of money there. I see we are also on it. A lot of good things. On the other side, sometimes I ask myself, okay, where did the money go here really? What's the result here for all of us? So it's not a nice discussion, but we have to do this. And for the entire community, crypto community, I would say this is something where we can contribute, and we should do that. This is very, very relevant. Over the last decade, some things were not so relevant, and now we see, wow, with digital payment, it's quickly getting very, very relevant for all of us. Thank you so much.